Welcome back, guys. Now we come to our last statement, which is the cash flow statement. So, without further ado, let's get started. Now, I've already created the profile of our cash flow. I don't want to waste any time on this. So, let me explain it to you. This is the header, and or we always started from the net profit. The net profit is the we have to mention here. So, we equal and bring the profit, the net profit, or last to here. So, this is our net profit. Let me format this as number. So, we always started with the net profit. Okay. Now we have to add in finance the activities. This section is belongs to operating activities. These are the transaction in the balance sheet, which is less than linear, like related to current assets and current liabilities. Okay, so whenever and this is also called working capital, which will explain in some videos. But here the idea is to whatever if the cash goes out, we have to decrease it, and the cash comes in, which is not very a simple idea about decreasing and increasing, but you get to know it. So this is related to operating activity. This section is related to investing activity, like we did some investment or long-term purchase of asset and other related. And the last one is here is finance activities, like if you do some financing for other source of income, or our equities also come into this place. So now let's get started. For cash flow, everything will come from a balance sheet. Okay, the balance sheet, all the balance sheet account we will be placing here. So if you go to balance sheet and start from the fixed asset, so this is the financing. We have to copy the from right out here and place it here. And we go again to balance sheet. We need to leave the bank because this is not our activities asset and anything. This is just bank. So we need to leave these three and these three other current asset and current asset, which is working capital related to. Uh, so we need to put it right in operating activities. Okay, now this part is all. Now we come to balance sheet. This right part here is not properly an as investment, but if anything related to long-term liability investment, you can put it at F1. Doesn't matter if you put it anywhere. So we need to skip our concept of that, and like that we need to come down again to balance sheet, and there was a paper sale. Copy it, come down here, and place it in the operating activities. And now the last part is retain on Amazon becomes you already mentioned retain is a net profit. So we need equity. Oh, that's it. That's all our account we have to read it, and then they are simple. Just look up formula, sell, look up. So what will X look combine? It's to look up a couple balance. So need everything for fix it and for turn and exact match. And just copy everything right. Yeah. Okay. Yes. And now we need to calculate it. Back to cash flow and cash flow from the activities. Change this cash flow from investing activities. This and net cash flow from financing activities, which is this. Okay. Now let's forward this a little bit. Now, one thing is like prepared expenses is our assets. Okay. So the cash is going out. Okay. But here, if you see it, it's showing an a plus sign. It's showing it's adding it. But people say they should be plus, but it's subtracting. But we need to flip this. Whatever is plus, it should be minus, and whatever is minus, it should be plus. So what we can do, we have to multiply by minus one. Okay, all these minus one. Now also these. This one, and so on. If you add all those to net profit, you can start from the net profit and all the net uh, cash flow from all the activities. You should reach to your cash balance in the account. If you've done everything right, this is our net balance is in our bank balance. Can confirm it from here. I will to ledger. Back one is here located 3,000. Put that right here. Okay. Back two, the 1,000 right here, and cash, we have nothing. So let's end this app at 74,000. Right? At 74,000, you have to come to the balance. If this is strong, you have done something. So this is the idea of cash flow. Uh, and that's it, folks. This is our last statement that we have completed our accounting cycle. We start from the charts of account, we make the accounts, then we approve some journal entries, then with the journal entry, we make a pair table and come to the ledger, and also we create it from this blob, the pivot table or fund balance, and then we make a profit and loss from pivot table. Balance sheet we created a little bit manually with the VLOOKUP, with the VLOOKUP formula, and we need to understand which accounts we put in balance sheet. You need to understand the concept and a cash flow statement from the last. All the balance sheet account should also come to the cash flow account. Now, why we did not include the profit and loss account? Because the profit and loss account is already been calculated from that. So we only pick up the net profit and plus minus of the inflow and outflow, and we get the net profit. We put it above right here, and then we calculate the balance sheet account. Then we at the end we need to come up with the cash in hand. So ending balance is on 20th of February is the same amount. So thank you guys for watching, and please subscribe and like this video. So in the future I have come up with more template and example related to accounting and the spreadsheet. Thank you.